How to buy and sell call options on Webull for complete beginners. Here's how to do it step by step in the app, how to avoid making mistakes by submitting trades correctly, and how to sell for profit without needing to wait until expiration. Jumping into the app, head to any tab at the bottom of the screen with the search bar to type in the stock you want to trade options on. We'll walk through buying a call option on Nvidia stock, then how to sell it to close your position to lock in profits or cut losses at any time. Typing in NVDA, select it from the list, then you're brought to the stock's chart page. To access the options section, click options near the bottom or to the right of the chart button. Now to trade options, you'll need to sign up for Webull and open an account. Right now, you'll earn up to 20 free fractional shares of stock for signing up, opening an account, and depositing. And even better, if you like Webull and you believe it's the right platform for you, the Webull link in the description and comment section below will allow you to earn free shares with a smaller deposit requirement than what's required on the public sign-up offer. Back on the options section, this screen probably looks really confusing to you as a beginner, and that's completely okay because this video is going to cover everything you need to know here. To begin, each row you see here represents different option expiration dates. You can see those expiring in 6 days on April 25th, 13 days, 20 days, and so on. Nvidia closed off the previous trading day at about $101 per share, but let's say we believe that by the end of this year, it'll be trading at about $175 per share or greater. We can then cash in on this prediction by buying a call option that expires near the end of this year. If our prediction does come true, we're able to profit a lot more than if we were just buying shares of the stock. Scrolling down, let's choose an option expiration near the end of this year. Let's go with the January 16th, 2026 expiration, which is 272 days from now. Now, before doing anything else, go ahead and click the drop down near the bottom right of the screen. Change that from both to just calls. This isn't required to trade options, but it makes navigating and reading the options chain much easier. Since we believe that Nvidia will be trading at about $175 or greater per share, let's go ahead and scroll up until we see the $150 strike price. Now, why 150? The reason for this is because if we choose an option contract that's close to the current share price, like $102, it's going to be very expensive to buy that option contract. But since we're confident that Nvidia will be trading at 175 or greater by this expiration date, we can go ahead and buy a less expensive option and still profit from the difference. You can see that if we choose the 150 strike price, it costs a total of $505, but if we choose one close to the current share price, like 102, it costs a total of $1,905. So let's walk through the process of buying the 150 call option. Buying a call option lets you bet that the stock will be above a certain price, known as the strike price, by a certain date, known as the expiration date. So by choosing this 150 strike, we believe that by January 16th, 2026, Nvidia will be trading above $150 per share. Now, the great part about options is that we can profit from the change in the option price itself. So if we buy a call option right now for Nvidia, and then tomorrow Nvidia's share price shoots up, we can then sell that same contract back to the market at a higher price than what we paid. Now, if the share price drops, the option contract also loses value. This is why it's so important that you only buy call options if you firmly believe in your prediction. On the order form, let's leave this as buy, then we can select the order type. Let's leave this as limit because it allows us to set the price we want to pay. Next is limit price. This is what we have to pay to buy this call option, and it's known as the premium. Now, option contracts represent 100 shares of stock. So while it seems like we only have to pay $5.05 to buy this call, we actually have to multiply this number by 100 to get the true cost. You'll then see the estimated order total at the bottom of $505.06. You'll then see the amount you have available to trade with. In this account, I have $1.49 available. This is just an example order, so if you're buying a real call option, you need to make sure this number is greater or equal to the estimated order total. You'll then hit buy at the bottom. Just make sure the number of contracts and the price looks correct to you, and you can hit confirm at the bottom to place your order. Don't stress here, just double check everything looks correct to you, and if you followed everything we've gone through in the video so far, you'll be in a good position. Now let's walk through how to sell a call option so you can lock in profit or cut losses anytime leading up to expiration. So let's say we really did just buy this call option, and on the next trading day, Nvidia jumps in price. That's great news because we can now sell this option contract to profit. To do this, head back to the options chain, scroll down and pick the same expiration date of the option you bought, then choose the same strike price. This time, make sure sell is selected, and under limit price, this is the amount we'll receive when selling this option. So we paid $505 when we bought this call. Let's say that because Nvidia's share price jumped the next day, this contract is now worth $8. Because we have to multiply that by 100, we just profited on the difference between $800 minus $505. At the bottom, you'll see the estimated order total of $800. You'll then hit sell, make sure the number of contracts and the price looks correct to you, then you can hit confirm to place the trade. Now, most people lose money buying call options, but what if you could turn it around and earn premiums instead of paying them and do it with way less risk? You can, and what we talked about today is just a tiny fraction of what you can do with options trading. In this video here, we break down the lesser known strategies the wealthy use to accelerate their investments and income, and we can use them too without being rich.